Well, good weekend, all. Ira Epstein with your SPDR ETF stock market wrap-up, your weekly edition for this Friday, the 23rd of February, 2024. And what a week it's been. My gosh. Look at the melt-up in a way that you've had a number of the stocks, all carried by NVIDIA. I think you'd agree. I think Goldman labeled it the most important stock in the world right now, and it most certainly is. And it became, what, a $2 trillion company, as you can see. It came out of left field. And this AI thing, as long as it's been around, I think you'd agree, it's suddenly just exploded. Today I saw exuberance, people calling for $1,500 in that stock. So I get nervous when I see that after a market's doubled and tripled a value of a company, and all of a sudden people are going, well, it's going to go from here and it's going to double again and so on. Maybe. But there'll be, before it gets to that price, there's going to be competition. You've got to make software that can use the chips. Not everybody needs that chip. And we're going to talk about that today because I'm going to cover TSM, Taiwan Semiconductor. And that's because not everything has a fancy chip. And you don't need fancy chips in all the products that are out there. Plus, Taiwan's TSM has been hurt because it's a Chinese company. You know, you can't get away from that. It is, all right? It is Taiwan, but it's still a Chinese company. But they have moved big operations going into Japan. That'll be semi-autonomous. That word, autonomous, and that'll put things together, all right? So we look at that and we go, okay, maybe there's some catch-up. We also have this week a lot of earnings reports, especially in retailers. How did they do? You saw, if you were watching, LVMH surprised the heck out of the market with 10% organic growth in December. That was a monster that they did last quarter. So they had a much better market than people thought. Are we going to see that spread across others? The problem is the retailers aren't the sexy thing right now in any way. Maybe you get a bounce out of them, but that's not where people are looking for the growth. They're looking for the growth in one area at this point in time. The word is tech, and that's what you got to remember. We had a good bounce in TLT and BND. Both gave you good bounces. And that's the question is, have they gone down far enough going into the PCE number, the next jobs report, where the market's going to be looking real hard and doesn't want to be overly bearish going into them, thinking that, maybe that was just a wobble, some of the numbers that we got in January, especially in jobs, and maybe we're going to see some weakness come back. I don't know. Tesla is just so much out of favor. Here's what was this? It was once a $600 stock and down. Apple's out of favor right now. You look all around it and everything rallies. It's not going anywhere. NVIDIA today, well, another update, but it most certainly was not the usual. Not the usual at all, up $2. That's more normal. And Microsoft still giving back a little bit here. Okay. Now, before we get to TSM, and it's right through there, why don't we take a look at the reports that we have this week? And let me get these up in a way that makes sense. I got myself out of sequence. There we are. We got new home sales coming out at 9 o'clock. They're expecting them at 6.68 million units, and that's the prior pace was 8%. So don't know that we'll do that, and that was at 664. We'll see if that picked up, because we saw some ugly housing data that happened this week. The Federal Reserve will update their monthly manufacturing outlook for February at 9:30. So we'll see what the heck's going to happen in that region. But, you know, industrial action, if you're looking at the stock market, has been very much on the positive side, not the negative side. So we look at it. The reason I brought up TSM is purely, is it a catch-up? Well, number one, it hasn't been laying dormant. It came alive, as you can see, in January, and it has given you a run. But it hasn't run like the other markets. It has gone from basically 96. It's gone up a third. You wouldn't think that, but it has. But think of the doubling and that and the other NVIDIA and some of the other markets that have gone. That's the point that I'm making. You've got a pattern of higher lows, higher highs in it. You're over the key moving averages of the 18-week, the 200-week, and the 100. That's bullish. And the resistance should be right here, where you're at in the market. So the question is, on just a straight pullback, would it be interesting as a purchase or not? Well, if it goes up and makes the higher high first, higher than this week, and then starts down, I'm not convinced that's the case. I'm looking at where you're at in momentum, and if you get to a 79 reading, I think you're going to be surprised the market can pull back. So until and unless the red line gets under 79 on a closing basis, I think the pros want to buy the market, but I don't think they'll reach up to buy into the Bollinger Band. I think it would be lower, and you have to measure, does it keep the embedded reading or does it start losing it? In Microsoft, the question here is, are we going to get a further correction? That's the big question to me. If we get that red line closing under 79, the odds favor that price in the 18-day average of 18-week average of closes will make a run at each other. Now that 18-week average is moving to the tune of about, as you can see, $4 right now each week. So that could get up towards $3.85, and prices to get back down there. It's not a big break. It's $15. I'll be looking at it on a way to see if it's going to do that and how the market works. Ultimately, I like Microsoft because I think they have the power in all their products to pass on costs and use the AI that is out there now. MCHI in China, you know that they are working hard to put confidence back in their market. Now, it's gimmicks, a lot of it. You can't short sell. You can't have big sell orders on the open or the close. If you're a brokerage firm and you have a client with a big position that's long, sometimes you got to get permission for that client to sell out. There's all kinds of things, but that's how they operate. But I look at the market and there is a number here at which it was overdone to the downside. Did we see it? The odds favor we did. You've lost the bearish embedded reading. You're making your first run to the 18-week average. I'm not saying it goes from bear to bull, but I am saying it looks to me like you've sold yourself out and the market's probably overdone and ready to consolidate and build from there. On the industrial sector, you're still bullish as can be. This has been one of the leading markets, in fact, that just keeps running to the upside. You hear how bad industry is in different cities, but not in this particular sector, I'll say that. In XLE, I'd be very cautious now. You're up to the up to the upper Bollinger Band and overbought. The market is consolidating. Is the market saying to us, is it saying to us that once these rate cuts begin, you want to be long these energies, this has been the pullback, and they're going to make their move towards the $100 a barrel with the oil off. The U.S. has been the big world producer. There's no reason for it to stop. But when we start seeing that Europe comes alive, in addition to China getting a bounce in its economy at that point, that market probably wants to go up from that point. We're not there yet. So I'm giving you the scenarios that could do it down the road. In the dollar index, the big question is, we've had a bear market rally on this chart. I mean, take the name off the chart. You're about to get a crossover of the 18-week average at 28.46, getting ready to cross under that. We've had a bounce out of an oversold condition. Is this market stalling out here? On the chart action, it is. In the gold, as nice as the bounce was on a weekly chart, on a daily chart, where it took out and it's no longer in the bear trend, you have to prove yourself on the weekly, and you haven't done that. You'd have to get over on this particular chart in GLD, 91.36 to negate the downtrend. Right now, it's a bounce in a bearish market. You have the trend down and the bias up. Silver's weaker than gold. How long was I saying it was stronger? Now it's weaker than gold, so it's flip-flopped itself with it, not doing much of anything right here. Eli Lilly, still acting great, but would I tell clients to buy over a Bollinger Band? No. You only stay over that number 5% of the time. And I know you're going to tell me it's going to 1,000 and you got to buy it there. I think you can, if you have to buy it, come in at better terms. You are embedded. That part I love about the market, which tells me on breaks, as long as you stay embedded, you're looking to be a buyer. But again, buying over the Bollinger Band, I don't think so. Uber staying still very strong. You know, Lyft gave back an awful lot, but Uber's the leader. You want to buy the leaders. You want to buy the Lillys, the Ubers. You don't want to buy the third and fourth tiers. I'm showing TSM because their product, it doesn't compete with NVIDIA. It's not that kind of a product. And it's used in just so many different things around the world. And it hasn't really gone, well, I guess 30% isn't bad, right? But it hasn't done what NVIDIA has done and some of the other players like that. When we look at Uber, though, you know, they own their market. All right. It is embedded, hard breaks to be bought, but you're at resistance still in the marketplace against the upper band. And uranium just doesn't work. OK, I don't know why it peaked out. We properly told you about it. You lost the embedded reading here. I know it sounds to you a little crazy because you made the higher high, but this is where the market ended when you lost the embedded reading. And then the market had a fake out and then came right back down. It didn't stay up very long at all. Momentum often leads price. That is the reason why. And right now, the momentum is very oversold. So maybe we're finally getting to the area here between here. Maybe it doesn't hit the Bollinger Band, and you're getting to a low enough area to the market to be of interest. Of interest to you should be all the different products we have. I'm talking our price counts. The charting software. Have you ever tried my charting software? I think, you know, once you plot your stocks and all with it and the ETFs, you go, oh, whoa, whoa, this is pretty interesting stuff that they've got there. And all the studies that I use, the way that I use them, they're all available in that. And of course, all of the different brochures. And this is only part of it. This page goes down. Once you click on the blue area, it just comes right in. And it goes into a basket, and you choose from there. Just move your cursor to the top up on the page, give it a click, and what will happen is you'll be taken to that, or go to iraepstein.com, free offers, and everything's there. In the meantime, you have a great weekend. I'm Ira Epstein. I'll see you Monday morning.